Also, just recently, we've seen several fluctuations in the stock market with leading indices like the S&P 500 and the Dow Jones Industrial Average having a huge dip. Of course, we've gone on to see several bearish activities from influential and leading investors like Warren Buffett. So Buffett has gone on to sell several shares and is piled up to $343 billion worth of cash, according to a statement from Berkshire Hathaway. But what is in it for the average consumer like you and I? How do these trade wars actually impact our finances? Well, in this video, I'll be sharing 3 tips or 3 things that actually happen in the wake of numerous tariffs and trade wars, like what is happening between the US economy, Canada, Mexico, and of course, China. Also, earlier this year, President Donald Trump introduced a 25% tariff on goods coming in from Canada, Mexico, and he doubled his initial tariffs on China from 10% to 20%. Well, we've seen several retaliatory measures from Canada and China, where Canada went on to also introduce 25% tariffs on US goods, and China also doing same. So what is in it for us? How do these things actually affect us? Well, there is an African proverb that says, when two elephants get into a fight, it is the trees or the bushes around them that actually suffer the most. So in this case, pardon my language, but we, the average consumers, are the ones that are likely to be impacted. Also, firstly, we are likely to see inflation. Now, what does inflation simply mean? Inflation simply means the general rise in the prices of goods and services within an economy. So the food, everything that we spend on, talking about cars, houses, and of course down to groceries, are likely to see an increase. Furthermore, there is an economic concept known as the consumer price inflation. Now, in this case, mind you, the tariffs have been introduced on products that have been produced and imported from Canada and Mexico into the US, and of course China as well. But over time, what happens is that these producers are so wise that they tend to see the responsibility or see the extra cost to the consumer. And in this case, the consumers are likely to produce, or they are likely to pay that 25% increase over a stipulated time. Because mind you, several companies cannot on any day actually absorb that 25% increase in the prices of inputs. And for that matter, they would have to cede that responsibility. They would send that responsibility or that extra cost to you, the average client. And secondly, it is likely to have a negative impact on our investments in that our investments are likely to shrink. So think about your 401k and then all the other investments that you're making within the stock market and of course outside the stock market. Now, anytime there is an introduction of a tariff, what that simply means is that companies tend to incur more cost in the cost of production or in the cost of delivering services and goods to you. And in that manner, it might actually affect their productivity or their profitability levels. And so in this case, the growth that you were initially enjoying prior to the introduction of these tariffs would likely not continue, and it would likely negatively impact the value of your investment over time. Consequent to all these factors, companies are likely to cut people off. And the reason is simple, because they don't have enough money to sustain their levels of production and of course to be much more effective and efficient in the delivery of their goods and services in the economy. What they tend to do is that in most cases, when there is a trade war like this and there's rising cost of their input, they tend to right size or downsize. And that simply means a cutting off employees or letting go of employees in order for them to stay in business. So we are likely to see unemployment go a little bit up over the next couple of months or over the next couple of years, holding all other factors constant. This might actually impact negatively the average consumer like you and I within the economy.